Hello friends! In our previous session, we have learned the classification and the golden rules of accounts. So today, we are going to learn the steps to be followed to prepare final statements. We are going to just have an overview of it. Well, we all know my friend Peter. This month, met his friend Alfred. Alfred showed his financial statements, but Peter didn't understand how this financial statement has been prepared. He was very curious to know about the procedure of preparing it, and he got his questions to us. But well, there is no quick answer for those questions. We need to follow some steps in order to get to the final statements. We can broadly say there are 3 stages. The first one is collecting data, then recording and transferring them in an organized format in different accounting books, and then comes the finalizing stage. So let us see what these stages are to be followed in detail, which will help us as well as Peter in preparing the final statements. So the first stage is collecting data. For any of the transaction that takes place, the first thing we need is a proof or an objective evidence of the transaction. We must have a documentary evidence or the source document for each transaction. For example, if we have purchased some goods, we must have a bill or a cash memo or any kind of supporting voucher. We must collect all these evidence and keep them safely and organized. So here we end with our first stage, that is collecting data. Then comes the second stage, that is recording and transferring. So the first step is, from these source documents collected, we will record all the transactions in a book called as journal. In a journal, we narrate and record all our daily transactions as and when they take place. As we know, a transaction is an exchange of 2 things. We will record 2 accounts that are equally affected in this book. It is always done date-wise in a chronological order. However, it is difficult to locate transactions in a journal if the company is relatively big and has thousands of transactions in one particular accounting period. So these companies prefer dividing their journal into supplementary or subsidiary journals like purchase book, sales book and cash book, etc. instead of one entire journal book. In these subsidiary books, the transactions belonging to one particular class are recorded separately in detail. So here we end with our first step of recording and transferring. So now we will move on to our next step, that is transferring. So from the journal, all the transactions are then posted into different accounts, and all these group of accounts are collectively called as ledger. A ledger has multiple accounts which contains all the information. This is a summarized book of all our transactions. For any reference in detail, we need to go back to the journal and check it. So now we will move on to our next stage. But we must be cautious before moving on to the final stage, as it is the last and final step. So before that, we will follow a transitional step so that our further statements give us a correct picture. So we will check our passbook and our bank account which we maintain. Suppose bank deducts some amount as bank charges and has not sent us any intimation. As we are not aware of the charges, we have not recorded it in our books. So there would be a mismatch in our book as well as bank's passbook. Similarly, there can be many situations where our book may not match or tally with the passbook. So to avoid these type of errors and to rectify it, a statement is prepared which is known as bank reconciliation statement. The process of recording and transferring ends here. Hope we have understood all the processes so far. These first two stages are followed as and when the transaction takes place. But we will move on to the last and final stage only when we need to prepare the final statements. And since we need to prepare it for Peter, let's proceed to the third stage. That is the final stage. So in this stage, we have to follow two steps. So the first step is very important, which will help us in preparing our final accounts. All the closing balances of the ledger accounts would be then posted to a statement called as trial balance. This trial balance broadly gives us the summary of all accounts. It helps in checking accuracy, and the balances of all the accounts can be found easily in this statement. So the next step is financial statements. It is a very important and crucial step. As it is a very important step, we will check our books that we have maintained so far. So as a prudent businessman, we will scrutinize all our accounts and have a look on our trial balance to check if we might have missed any entry or any transaction. So we will go back to all our accounts and check if there are any errors and then rectify it immediately by passing reverse entries to nullify or neutralize the wrong entries. And if certain things are missed out, they are noted as adjustments and adjusted in the trial balance itself or at the end in the financial statements. So after all the errors and rectification and all the adjustments, now let us quickly move on to the last and final step of preparing final statements. It consists of three parts or three statements, namely trading account, where purchases, sales, and all trading related expenses are recorded. So from this trading account, we get a gross profit which is transferred to the profit and loss account. So the next statement is profit and loss account, where expenses and incomes related to day-to-day administration, selling and distribution, and finance are recorded. This profit and loss statement gives us the net profit for the entire accounting period. The last and most important of all is the balance sheet, where all assets and liabilities are recorded. The asset side and liabilities side should give us an equal and balancing figure. We call this as a backbone or X-ray of our business. It gives a complete picture of the health of our business and is responsible for many decisions to be made. The financial statements are used by many users to arrive on the conclusions about our business. So with this, we complete our process of preparing final statements. The whole process which we have followed, that is from the source documents to the balance sheet, is continued from start to end in each accounting period, and hence we call it as the accounting cycle. My friend Peter has already made his notes on this, and the process seems to be clearer now. Hope this was easy to understand. We will learn about all the topics in detail in our subsequent sessions. If you like our videos or have any queries, please do comment and subscribe to our channel. We will meet you soon in our next session. Thank you.